You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 4th day of April, 2019. So glad you could join us. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We're glad to have you with us. I have a chart up of the S&P 500 Emini Futures. This is a monthly chart. If you can't see the chart, go to our homepage at cfrn.net. On the right-hand side, click the big microphone. Follow the instructions. You'll be registered in 30 seconds. We'll even send you an email each day, which you can opt out of if you'd like, reminding you the show starts at noon, and you can join with one-click access. If you're out of the office, working off a cell phone, you can always join us live in real time by going to youtube.com/CFRN/live. That's right, a live simulcast of the show in real time each and every day, thanks to the good folks at YouTube. Thanks, YouTube. This monthly chart that I have up, it shows the all-time high, followed 1, 2, 3 months later by the worst December since 1931, followed by the first quarter of this year, 2019, which is on record as being the single most powerful advance in the history of the markets. Right here, you're looking at it. So we're just off the all-time highs. We're on a monthly. The only thing that doesn't, remember as a kid you would have those magazines or the puzzles, you know, what doesn't fit in this picture? Well, this is what conflicts with the rosy picture up above. See? A leg, a retracement, another leg. I mean, we could literally duplicate this leg. Take a look. If we go from the low to the high, to the retracement low, from the low of 2016 to the high of September 2018, to the retracement low, which was December of 2018, a 100% extension of that leg will put the market up at 3460. We're at 2860. 3460. Is it doable? Is it possible? Could it happen? All of that. Now, these are Fibonacci price extensions. They're based purely on math. Okay? Nothing fundamental, unless you consider numbers fundamental to life. Nothing technical, unless you understand the technicals of numbers. So right here would be a 50% extension, a 62, and this would be a 100% Fibonacci extension, taking us right up here. It looks like somebody might have measured this once before. There you go. In order for that to happen, the market has a lot of obstacles to overcome, has a lot in its path. Look at the daily chart. Now, we're still in that same area that we were yesterday. Bearish cross, current price. That's the big picture dynamic. This uptrend broke down October of last year. We got a bearish cross, which for us, that says lower prices. And we got a leg and a retracement, a leg and a retracement, a leg and a retracement, a deep retracement, creating a little triple top here. And then it really fell out of bed, all the way down to the low. Now, we've been stalled out up here for basically 1, 2, 3, 4. This is day 4. How long can the market go sideways? How long can it consolidate here? Longer than you want to think about. And that's true. Just saying. October bearish cross, current price, consolidating. The Telegram channel, as we approach this area, and I discussed it with everyone in the channel, I said the most likely thing, I did say, as we approach this area, the best that we could hope for would be a V top, as this was a V bottom. You don't really see a whole lot of V tops. I mean, you got a couple here, but rounding tops seem to be a little more common. You can see rounding and rounding. And you go, well, but that wasn't the top. Well, no, but at the time it printed, you didn't know that it wasn't. Right? But this kept you on the right side of the tracks. Okay. So now we've pushed back up into this area where it all broke down. We consolidate for the rest of today, the rest of this week. We consolidate for the month. Proper fuel on the fire should send this higher or lower. Oh, well, thanks for sharing that. I tuned in to hear you say it could go higher or lower. Well, anyone that tells you anything else, it's just a guess. It's a gamble. Because God didn't create us to know the future. Not man, not indicator, not oscillator. So, if the camps are equally divided, if 50% of the folks say we're going higher and 50% say we're going lower, guess what? Somebody's going to be right. Consolidation will lead to a run at these highs, and as we approach these highs, one or two things will happen. We'll punch through, maybe not on the first attempt, but we punch through, we hold it on a pullback, and then that allows us to continue that path upward to create a 100% duplication of this leg, right? If we fail up here, even if we punch through and pull back to confirm good support, if that fails, we could put in a new all-time historic high, price fails, and then we come back to test. We've not, on this move up, we've not tested a 24% Fibonacci retracement. It looks here, at first glance, you go, oh yeah, well, we pull back to the 24 right there. No, because you see this high up here? When we pulled back to here, this high was right there. Right there-ish. There we go. Right there. From that low down there to this high, see, we pull back to the BBC, which we talked about quite a bit, but not a 24% retracement. And then as we moved higher, this by far was not a 24% retracement. So we had a shallow retracement, a shallower retracement, and now we're waiting to see what's going to happen here. If we start closing, you look over here in October, you see how we broke through. The pullback was contained. A leg, a retracement. In the moment, you might have been thinking, hey, this isn't holding. But look what happened. We punched through, and then when we pulled back, that's where it failed. It failed to hold. Did it again here. These were big markets. This is a daily chart. And then when it got cooking on that final leg to the downside, there it was, right into Christmas Eve. This is the day after Christmas. Day after Christmas, we actually put in a lower low, turned it around. That is a bullish engulfing candle. This day, December 24th, this day, December 26th. On the 26th, we put in a lower low than the 24th and a higher high. After this huge move down and the worst December, since 1931. There is no more bullish signal that I know of than this bullish engulfing right here. Right here. And it opened the door and led the way all the way up to where we are right now. Okay. Now you see this 1, 2, 3, 4 days, right? When I come back, we'll take a look at it on a smaller time frame. We'll jump from the daily to the 30-minute, and we'll talk about why this is such a problematic area up here. Today is Dr. Tom Day. Dr. Tom will be here top of the hour. We're going to talk about debt. How to get out of it, how to stay out of it. So if debt's an issue in your life, Dr. Tom knows what he's talking about, so stick around. We'll talk about that at the top of the hour. S&P starting to break down just a little bit. Let's take a look at the numbers real quick. Then we'll go to Michael and get a recap of everything that happened in the live training room today. Let's pull some fresh data. All right. Again, cash markets, the Dow currently up 81 points. NASDAQ down 35. S&P 500 down 5. The Russell 2000 up almost 1 point. Now, for the Dow to be up 80 and the S&P to be down 5. Unusual. They're on opposite sides of the street. Who got it right? Chances are the S&P, but we'll see. In the commodity basket, crude oil up 4 cents, trading $62.50 last. Gold down $2.90, trading $12.9230 last. In the Asian markets, Nikkei finished the session up 11 points. Shanghai added 30 points. And at the close, the Hang Seng was down only 50 points. And in European markets, the FTSE shed 16 points. The DAX gained 33. The CAC lost 5. We have no movers, no shakers. Closest thing to it would be the Shanghai, up 30 on the session. And that's almost 1% for the Shanghai. We have a mixed day in Asia, a mixed day in the UK. And here at home, it is a mixed session as well. Let's go to Michael, get a recap of all that happened in the live training room. I'll be back. We'll talk more about this 30-minute chart, and we'll check in with John, see what he's got cooking for today. And then top of the hour, Dr. Tom.
Dr. Tom. All right, I will bring it over here to North Carolina. There you go.
The rolling hills of.
Yep. There we go.
Alrighty. It's all yours.
All right, I got it, Dwayne. All right, good afternoon, everyone. Today is Thursday, the 4th day of April, 2019. Today in the live training room. Well, first of all, if you've not taken a free trial with us, go to the homepage at CFRN.net. It's right here. Homepage at CFRN.net. And in the right-hand column, it says 5-day free trial. You can click on this right here. It says apply.cfrn.net. Once you do that, you'll be brought to this page, where all we ask for is your email, your first name, and how you found us. Click on the submit button. Once you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we do not know that you took the free trial. So you must click on that confirmation link. All right. Now let me get a look at our audience here. Yeah, okay. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, on our final action of the morning is where we got the goal for the day. Today's the 4th day of April 2019. We had 6 on the euro, 3 on crude, 1 on gold, and 2 on the ES to get us at 102.50 this morning. It took all morning to do that. I did miss a couple of trades this morning, but using the stuff that we do in the room in the morning, it was pretty slow trading today. Okay, but so today it took 120 minutes and 9 trades to get to the goal for the day. At that point, we're up 102.50, and we took a total of 9 trades this morning. We're only 4 days in a month. We're up 375. And if you look at last month, we were up 2353, 2067, 2031. Those are the prior 3 months totals. On the year now, 6,827. That's over 59 days, averaging 115 per day. Now again, that is 1 contract, 2 hours per day. 1 contract, 2 hours per day. Okay, so here we go. We missed this one right here at 10:05 on the gold, and that would have probably gotten us our goal for the day right there. But we did pick up this right here. We got 1 tick on that. Then Slingshot was not set up in here for a long trade, okay, or here. It had to wait until it got way over here, and we got another break even right there. Okay. From there, it put in a higher swing, but then pulled back down, dragged the cycle down with it, and then it got into the break. Now, during the break, there was nothing. Still is nothing during the break. Okay, we don't have a trending market, so nothing there during the break. Now, on the euro, we had, you can tell the euro started here and just went sideways and sideways. And I had drawn that line in there. I was looking for a close above that line. Then once we got the close above it, the cycle changed color, so we had to have a close above the trend line, but it would have had to have been below the MA1 because we hadn't broken dynamic resistance yet. Okay, we needed to break that dynamic resistance. It finally did break that, and then pulled back and gave a bounce right here. That landed on the trend line. That was our last trade of the morning. You can see it ended at 11:30, exactly at 11:30, 11:30:09. That's where we picked up the goal for the day. So we got 6 ticks out of that. Since then, there's been nothing. Nothing. All right, and it's not uncommon lately for gold and the euro to flatten out after 11:30 a.m. Eastern. Crude oil. Let's see, crude started out in here, but the cycle was going up too steep to look for any short trades. Then it got up above the BBC, it changed directions, got up above the BBC and gave a bounce off the BBC right there. We picked up 3 ticks there, okay? And it changed directions again, and I had to wait till it broke this dynamic support. It did that here, and we ended up with a break even on that, a break even on that. Changed directions again, and it looks like I missed one right here. Right here. Looks like I missed that one. And that moved up, and we ended up with another break even there, and I missed one there. And then, getting into the break, we had possibly along off the BBC right here during the break. I know we have dynamic resistance there, but it was broken back here, and the entry would be below the MA1 anyway. See right here, the MA1 is blue, the cycle is blue, and the green line is below the cycle. We hit the BBC. That's our highest probability trade setup right there. That happened during the break. I'll highlight it here for you. That happened during the break. And, it gave some profit. I probably would have gotten a break even out of it, though. It did, the entry point would have been 59. It ran up to 71 for 12 ticks in profit. But I probably would have gotten a break even out of it. After that, you are looking at this right here. It would have been a short off the BBC right there. Okay, because the cycle was still red on down close. And right now your stop would be a break even. Okay, so your entry point would have been right in here at 62.5, and your stop would be a break even. Now this highlighted area here, I don't think it's a weekly trading zone, but it is in the area that I highlighted. yesterday morning, and I said you can look for price to move away from that and to come back to it. Now, earlier today, crude dropped all the way down to 61.90. You could have looked at crude options at that point. Excuse me, the April 12th crude options, looking for them to get back up there to 62.5. Okay, to 62.5. Now, the options with the most volume and open interest are down here at 63.5. Okay, well, that doesn't have the most volume, but it's got the most open interest. And you would have been looking at calls. But we can pump it out a couple more and see what we have here. Yeah, the most volume is right here at 60.5. That's the most volume. Those are puts, though. You would have been looking at calls at that point down here earlier today. And looks like the most volume is down here at 64.5. and the open interest is pretty good on that too. You got to keep all those things in consideration when you buy in options. Okay, how much open interest is there? What's the volume like? But that would have been a good time to look at it. Okay, I don't know if Michael G is in here right now, because he usually likes me to give him that information. Nope, he's not. Okay, moving on to the ES. We ended up with, let's see, it started out really nasty here on the ES. You see that? Then it started moving up. We missed a long trade right there. Missed a short trade right there. We picked up 2 ticks here. Missed a long there. Break even there. And during the break, let's see. It looks like during the break there would have been a long right here, but it would have been break even right here. Okay, that would have been a break even. Changed directions and it gave a short right here that you may or may not have picked up some profit on. Came all the way over here, didn't get anything. Then here, still nothing. We don't have step 2. So we ended up with just plus 2 ticks this morning on the ES. Okay, so going back here to this, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today's the 4th day of April 2019. We made 6 ticks on the euro, 3 ticks on crude, and 1 tick on gold. That gave us a total of 102.50. I'm sorry, we made 2 ticks on the ES. That gave us a total of 102.50. Today it took the whole morning, 120 minutes and 9 trades to get to the goal for the day. But as you saw, I missed some trades this morning. We took a total of 9 opportunities this morning. That puts us at 375 on the month. And on the year now, we are at $6,827. That's over 59 days, averaging $115 per day. Averaging $115 per day. Now, if you have not taken a free trial with us and you want to, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial. Apply.CFRN.net. Click on that, and you will be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. And that's it. That's what my morning was like. Again, look at this area right here, the 62.50 area. If price gets away from it, anticipate that it's going to get back to it. Okay. Okay, and with that, we can pass it back to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Man, I'm all choked up this morning. Just a reminder, everyone, a couple of reminders. Can somebody type something in so we can put the link to Bert's webinar this afternoon at 2 p.m.? Just type anything, anybody. And we can put the link to Bert's webinar this afternoon at 2 p.m. And in that webinar, he's going to go over everything that we do in slow motion. It'll probably you know, maybe look at different time frames and stuff like that too. And nobody's typed anything in. Can somebody type something in? Just a Y or an N or a Z, B. There you go. Thank you, guys. Okay, I don't actually have Bert's link. Valerie, do you have it? Can you paste it in there? It'll be the link to Bert's meeting this afternoon at 2 p.m. We have a partners meeting tonight at 9 p.m. Okay. So if you are an active partner, you will be sent a link to get into that. If you are not an active partner and you want to become one, you just got to send an email to support@cfrn.net and put partner info in the header. Okay, just put partner info in the header, and we will get you all the information that you need. All right. And with that, we can, I think Dwayne's back now. I hear somebody.
It's me.
It is you. Okay. Valerie, I don't know, do you have the link to Bert's meeting this afternoon? If you do, can you just paste it in there? The meeting is at 2 p.m.
If you haven't been to Bert's meeting, go. You should go.
Yes, you should go.
Just go. All right. Let's see. I think John's here. Or on his way. No, he's not here yet. Okay. All right, back to this 30-minute chart. Let me just shrink this up. Oh, recap of the recap.
Today it took 120 minutes and 9 trades to get to 102.50. I think I write that down in my log.
Oh, there you go.
Took the whole morning.
That's a good bingo. All right. All right.
Okay.
This is the Sunday night gap open right here. We hit this weekly trading zone and just consolidated. Only 3 things happen at a weekly trading zone: consolidation, rejection, and of course the slice. This is consolidation. We then moved up to the next area of consolidation where we just rolled sideways. Not conducive for trading, but it is what it is. After the fact, on a historic chart such as this, you can always go back and pick out spots. Oh yeah, I could have just did that. You know, no. It looks different up close, live in real time. Okay, so don't be an armchair quarterback. Just go. Yes. Then we move up to the next level. Now, when we move from zone to zone to zone, as we do week after week after week since December 14th of 2009, it's usually more like this, or maybe it's like this and this and this. But to roll right, jump up, roll right, jump up, roll right. And I've been waiting for all of you to show up so that I could do this live in real time. There you go. We extend that over. Now, could I pull it down and pull it up, make it wider, encompass everything? I could, but I think better. This exemplifies the whole problem with this area. As we came up here, this is our highest weekly trading zone. Once the weekly trading zones are issued, we don't change them, massage them, manipulate them, do anything with them. They're carved in stone. So we get here, we consolidate. On a 30-minute chart, you can see rejection here, you can see consolidation. You got to understand, inside of a 30-minute candle an awful lot happens, and so price was just hovering up here during this period. Now where are we? If we look at these lows here, right back down to support, which that support is the top of this little trap. Look at the horizontal line on the cursor. See that? So resistance became support. Resistance became support. See that? That dynamic repeats over and over, day after day, week after week, on every time frame. Okay. Now, when price starts to do this, there's no high probability trade set up here. Not based on our methodology, not the way we see the market, not the way I build my ongoing narrative each and every day. Last night in the Telegram channel, let me see if I can find that, and I'll show you exactly what we were talking about. All right, got it. Here we go. Now this is the same chart we were just looking at. So this candle that was dropping was right over the tail end of that arrow. All right. And as it continued to come down, again, right above the arrow, and then the next one, pointing at support. Look at this wick, came down, hit the support area. Also, notice right here, where the bullish cross happened, in that same area, what's happening? Market's finding support. When price was here, buyers found it very inviting, ran it up. What's changed? There's John. That's just it. Nothing has. Hang on, John, to get your mic open.
I got him. I got him.
All right, thanks.
There he goes.
Hello. Good morning.
Hey, John. Welcome to the show.
Hi. Thanks. Morning, Mike. Yeah, it's the market is a little bit vulnerable here because you've got a bit of a tug of war going on between that news that came out yesterday, which is the lower employment, and then this morning the weekly jobless claims came in pretty strong. I think around 60, something like that. They're down to record. Well, they're actually down to record lows. Because,
last time it was that low, I think it was 1969.
Yeah, but in reality, when you take the size of the economy, 200 claims today, 200,000 claims today is the equivalent of 100,000 claims.
Sure, because we got more population now, right?
Right, double the population. So the real number is 100,000, yeah. Adjusted for population, on the log scale, on the same scale as 1969. So this is unbelievable. It's actually registering lower lows than the 1954 all-time low unemployment rate, or the early 1950s all-time low unemployment rate. And look. The only number that's not making record lows in unemployment is the actual number itself. Everything else, the number of people working is at an all-time high. The number of black unemployment is an all-time low. The Hispanic, females, Asian, etc.
Everywhere.
All of these categories are making new lows. So it's just about as good as it gets.
Safe to say, if anyone in America wants a job, they can have one.
Yeah, and that may be the reason why there may be still, in spite of the jobless claims, there may be a down number tomorrow. I mean, look, if it's an upside surprise and it kind of evens out last month, that would be fantastic, and it could happen. But it seems that the labor force is so tight right now, the job market, that it's actually possible that there might be an artificially lower number than normal based on the ADP yesterday, because they just can't find people, you know, to join the workforce, which would explain, you know, the drop off, if you like, in employment. So that's now the bonds. They're, you know, 2.5 points from the recent high, or basically 3 points from the recent high. They're bouncing a little bit here, so that possibly tells us that that number might come in. What are the implications of that number coming in lower? You know, there might be an initial reaction like last time. There might be a bit of a sell-off to start with, followed by a rebound. But as it is right now, unless my data is wrong, it seems the Dow is up an awful lot. I'm not sure if my situation is frozen or something, but
let me pull up the Dow chart. Yeah, the Dow is outperforming the S&P to the upside. There
just
it is,
one
right
second.
there. We had a gap higher open last night on the Dow, and we had an alert to close the gap, which it did, and then a little.
Yeah. Okay.
Yeah. So here's the Dow.
Yeah. No, I think my system's gone. My system's not updating for some reason on the Dow right now. So yeah.
Cash numbers are the Dow's up 90 points.
Yeah, no, I'm showing up 157, so there's something definitely.
Yeah, it's up 90. Trump gives Mexico a year to stem the flow of drugs and migrants, or he will impose auto tariffs or close the border. That's news just out.
Okay.
Palladium breaks above 1600 in record run.
Yeah, that's not happening today with Palladium.
Oh, that's not today's news?
No. Palladium's come off a lot, but the news of the day is platinum.
Oh, you're right. This is dated Tuesday.
And as you know, we called it a few days ago that it was time to buy when it was at 850, and it's at 900 right now, 902. This platinum, I think platinum has started a super bull market.
From 1600 to 900?
No. The palladium dropped from 1600 down to about 1340, and platinum has suddenly taken off from it was about 850 when we said, you know, you should start buying it. It was a Russian, you know, we called the lows back in the early in the year at 800, just above 800, and or maybe even below it, and then it's been consolidating around the 850 area, and now it's taken off. Now look, there's still this could be a kind of a sharp a three-wave upward correction. That's probably the only remaining risk left in platinum at this point, depending on how well or how this market goes in the next few days. But to be honest with you, it's kind of what we said, you know, is that when this thing gets going, it's going to shock people, and it's going to be very, very bullish for gold and silver. Now, it's not being reflected in the gold and silver price yet today, except for the fact that we had another test of 1485 on the silver, 1486, and we're back to 1504. We had a test this morning at 1285 on the gold. We're back to 92. So the platinum is kind of dragging the metals up, you know, because it keeps going higher. And the likelihood of you know, it's starting to look like it's a runaway bull market to the top. It's kind of looking like palladium did, you know, 6 months ago. But it really has the feel to me of an unfolding super bull market here in platinum, and I think that's going to be very bullish for the metals, especially if there's, you know, if anything that happens tomorrow in the employment causes gold to jump $10 or $20 or more, I would say that's going to be particularly positive for the metals, because the way I see it, 13, 15, 13, 20, if we start taking out those numbers for gold, it really is going to, there's a real possibility that it could just keep going. It could just actually, I think today gold was manipulated down. There was a big sell order of 40,000 contracts before the open. Somebody's trying to keep this gold down. They may end up losing, and obviously if gold closes about 1,300 today, they're a net loser on that position to a staggering amount of money. So this is what makes these short squeezes. This is these people back in 2005 and 2004, when the oil started going above $40 for the first time in a decade or more, or two even, or a decade and a half, say. No, even more than that. It was about practically 2 decades. People were shorting oil and doing all kinds of fancy transactions, trying to short, today's production and buy the future production and things like that. And it went down a couple of times to 36, and then all of a sudden it came back, and the third time it went through 1240, and next thing you know, we're on our way to 150. So this is sort of how this gold scenario could end up unfolding. The silver also, I think 1550 is a pretty key number. 1530, 1550. If we start breaking through those numbers on the upside, we're really going to get some fireworks. And Royal Gold, JNUG, the nuggets and all that, they're not really giving up a lot of ground from where they've been in the last few weeks. They did go higher. They've pulled back a bit, but Royal Gold and Newmont are holding up extremely well. Most of the gold stocks are holding up very well, actually. So now the grains are also, which we said to buy a few days ago, if you remember, pretty strongly, have been creeping higher a few points every day, and they spiked higher a bit today. They definitely are looking like they're going to go higher with some authority fairly soon. Remember, there's a Chinese deal that could finally get some traction. There's a lot of soybean buying. There's problems with other countries' production. So, and there's kind of a limit, I guess, on how much more yield they can get out of the U.S. crop. Are we sort of at maximum output right now? We very well could be. And then these floods that happened, they've certainly been a little bit bullish for the market because some crops get damaged in those floods. Something very interesting happened yesterday.
What's that?
There was a report out on Bloomberg about this Ghawar well in Saudi Arabia. It used to do about 5 million barrels a day. Biggest, there's two of the biggest oil wells in the world, were the Cantarell in the Mexican field off in the Gulf of Mexico, which was discovered by a fisherman. Mm-hmm. Right. There was oil in his nets, and he went and told Pemex about it, and they ended up finding the biggest offshore well in history. That well is down to under 1 million barrels a day today, and they have to pump nitrogen in to keep it going. But it used to be, at one time when Mexico was producing more than 3 million barrels a day, or upwards of 3 million, this was where a lot of it was coming from. In Saudi Arabia, this Ghawar field is kind of like a mythical thing. It's just, it's kind of had an endless output, in 4 or 5 million barrels, and all of a sudden they're saying now that it's, they might be down to 3.5 million a day. So it looks like it's seen its best. It's finally, because if the Saudi wells ran out or started depleting to a meaningful amount, they can't probably get this IPO done quick enough, because if people start to get a sense that the Saudi output is waning and the reserves are declining substantially, that could affect valuations significantly. Now, obviously, short term, it's very positive, and it fits with what we've been saying, a long time, about the possibility of oil rather, going back to $120 a barrel, maybe even spiking up to 150 or even higher in some sort of a crunch that lies ahead. And if this big field in Saudi Arabia doesn't, I mean, there's a headline we've been anticipating for a long time, and it's finally arrived. I think it's a pretty big deal. And, with Venezuela offline effectively, Libya still having problems, Nigeria having problems, and then the North Sea depleting, and a lot of other places, you can see a potential scenario where we could have one last rally in the oil patch, kind of like what happened in the 80s. We had two spikes. We had a spike in '74, and we had another spike in 1980. I think the second big spike, we had the big spike in the end of last decade in oil, and I think there's another one to come, maybe about a decade later, and that obviously would be very bullish for gold as well. So all of these factors are coming together, and I think beyond this next spike, the price of oil might be a different kind of a commodity going forward, because we will be making the transition to more and more electric cars. So but I think there's enough existing inventory out there today, and future production of the engines, regular engines in cars for the foreseeable future, that is enough and with this world growth spurt that's coming as well, it's enough to put us over the top sometime in the early 20s in oil. I mean, as we said a couple of days ago, imagine if the U.S. wasn't the biggest producer today, and is making up for the Saudi shortfall that's developing, and right, possibly even the Russian shortfall as well. So, and look, a lot of the U.S. production may be in wells that are, going to peter out here in the next few years. In other words, the early wells of this decade may be close to running out of their maximum output. They start declining almost from day one, and they tend to go down year after year after year until there's not much flow left. There's a lot of wells like that out there, in increasing numbers as time goes on. So the miracle of U.S. production today is not necessarily guaranteed in the future. Even though we've made this huge discovery in Texas last year, which buys the U.S. another 7 years of output at full throttle. So, and they've got Alaska and other places, more offshore development, etc. So, the U.S. picture looks pretty good for at least for the next 5 or 10 years, and but the rest of the world, especially Saudi Arabia, may run into unforeseen or unexpected declines, and they may not be able to turn it on like they used to, where when the oil price got too high, they were able to max out a bit and get the price down, and where it went next. It went from 150 down to 30. So crazy things can happen.
What was this recent court ruling? Trump had opened up some fields for drilling.
Yeah, a judge has temporarily banned or put some sort of a ban on offshore. I think it's offshore. It's offshore somewhere, maybe offshore Alaska.
Yeah, I think it's Alaska.
Offshore. I think it was the Atlantic, actually. Offshore.
Maybe the Atlantic too. Yeah.
Okay.
Yeah.
So how big a deal is that?
It's big. It's I mean, it's probably going to get overturned, but it's somebody's. It's just the same as these other things that they try on for a while, and finally, eventually they get they get overturned. So the oil is actually creeping higher again today as a result. I'd say, unless the market tanks or something in the next few days, the likelihood of oil going higher is still on the cards. It's not running away today by any means. It's pretty steady over the last couple of days. So.
Yeah, I mean, it's this is a daily chart right here, and we put in the low. Interestingly enough, this lines right up with the S&P. You see that?
Yeah.
December 24th, and then we took off December 26th. So when we talk about in the live training room or workshops or wherever we might be talking, when we talk about the S&P and crude having a tendency to move together, well, this pretty well displays it. Here's crude on a daily chart, and here's the S&P on a daily chart. So they certainly walked up the hill together. You think $70 is going to do it?
Yeah, probably. I mean, it's got to the 60s, and it really looks like I'd say right up to that previous 64, 66, 68, somewhere in that. Could it go all the way? Yeah, you can't rule anything out, I think. But as you can see, that's a sort of a barrier where you're drawing that right there.
Yep. There's resistance, support. Gotta anticipate it's going to be good resistance until proven otherwise.
And another thing is that today this Tesla is in trouble. Production.
Oh yeah, that's right.
Way down, and it's really getting hammered today, big time. So
they missed on deliveries, is the deal, right?
Just a lot of people are not
Tesla.
into the. First of all, the cars are very expensive, and it's just not everybody's type of car. It's a fairly niche kind of a market right now, this electric thing, and maybe they're running out of customers, and so it's a bit of a tough bridge to cross, because they're at a critical point where positive cash flow is very important. Otherwise, they've got to borrow a ton of money to keep going, just to survive.
Right.
I mean, it doesn't look too bad on the long-term chart. It's down to a lot 3 times. This is the 3rd time it's been down to 250, and it's bounced the last couple of times right back up. If it bounces this time, it could go to a new high, and you can never underestimate what will happen to this stock. So it's a key test right in here.
All right, John, anything else you want to cover?
No. Listen, thanks very much. Have a great afternoon, and we'll catch you tomorrow. Bye.
Yep, talk to you tomorrow. Have a great day. Okay, Dr. Tom. It is Dr. Tom Day, as I told you at the top of the hour, and Dr. Tom still has his mic on mute. So, Dr. Tom, as soon as you unmute your mic, I'll bring you on. Too much bravado and applause, even if it's a golf clap.
I don't know, I'm trying to unmute him, but I can't.
Yeah, I think that means he's muted on his end.
Yeah.
I think that's what it means. Okay, here we go. Let's take a look back at the S&P, where we continue to grind sideways. Now, you look left, you go, okay, support. So if we get below that, we should be home free, right? Not so quick, because we're going to run into this support here. Support. Well, if we can just break through that, then we'll be fine. Not so quick, because you got support at a weekly trading zone. And we know what happens at weekly trading zones. The most likely thing is consolidation. This thing consolidated from March the 31st at 8 p.m. till April the 1st at 11 a.m. These are 30-minute candles. Each one of those candles represents a half hour. So as we drop into this area, we can expect more of what we just had. And then as we drop into the next area, represented here by the zone, we can expect more of that. And today being Thursday, then that takes us right into Friday. And then all we've got left to look forward to would be the Sunday night Globex Open. Is if there's some kind of blowout on the employment numbers tomorrow. Non-farm payroll comes out at 8:30 a.m. Eastern. The forecast number is 175,000. That's a high impact, one of the highest impact economic events, it seems. So keep your eye on that tomorrow morning. If you trade pre-market, if you trade Globex, don't be out there clicking the mouse and not be aware that at 8:30 something's going to happen that will rock the markets. Good, bad, up, down, doesn't matter, because we don't trade the news, we trade the reaction to the news, whatever that might be. So this way.
Hello.
Hey, there you are. Been waiting for you.
Well, not very long. It's only 2 minutes after.
Promised the golf clap when you showed up, so there you go. Dr. Tom Day. Hey, how are you?
I'm doing fine. How you doing?
Very good, very good. So, it's been a week since we spoke. What's been going on in your world? Anything? Any developments, breakthroughs, news you can't wait to tell?
Well, Tuesday night I was asked to speak to a crypto group, and we did an hour-and-a-half seminar on the relative merits of gold and cryptocurrencies. So that was very interesting.
So you're kind of bringing the two together under one roof?
Well, not necessarily. It was just they had a speaker there about crypto. He's a guy that is a programmer and designs coins and blockchains and so on. And that I was there speaking about gold. But then at the end we did a little Q&A session with the whole audience and just sort of compared the pros and cons of each. So it was interesting.
Well, good. I'm glad it went well. What do you want to talk about today?
Well, I texted you earlier. I don't know if you saw it.
I did.
But if that's okay, I would like to talk about...
I texted you back.
You did?
I did.
Okay.
According to my phone, I did. But anyway, let me make you the presenter.
Okay. Sounds like a plan.
There you go. You know, the S&P 500, boy, just less than, as of yesterday, we were 2% off the all-time historic high. And we just kind of been grinding sideways here now for the entire week. I don't know if you've been watching the markets, but we're at a place where to get a retracement would be natural, would be normal, would be expected. But there's a lot of political pressure on this market because President Trump would like nothing better than while he's out on the stump to be able to say, oh, and by the way, while I was fighting off, you know, the media and the fake news, we also made all-time historic highs in the markets, in the S&P. That would be just one more thing to add to his list of accomplishments. So this market has something a little different than normal, and that's political pressure being applied. My opinion, that's all.
Yeah, and you know, having worked and had clients that traded the markets a lot, I found that Democrats, you know, of course they invest, but they don't tend to be active investors. They tend to just give their money to a money manager and let that person manage the money for them. And Republicans are more hands-on, so they have a vested interest in helping the market stay up to help Trump. I have a little different view on how the markets can help the president or not than a lot of people, because I've looked at a lot of charts over decades of economic activity and growth versus the stock market, and they are not necessarily correlated. Sometimes they move in the same direction. If the economy is good, the market goes up, but just as often they run opposite of one another. So I wrote an article about a year ago, sort of an open letter to President Trump, and I advised him to stop touting the stock market as an accomplishment of his. I said, you know, the things that a president can affect, such as joblessness, brag about that. You did it. Getting rid of regulations, brag about it. That's something that's under your control.
Right.
Lowering taxes, same thing. But I said, don't brag about the stock market. Don't take it as your accomplishment, because it's going to go down at some point. And when it does,
you're going to have to wear that as well.
Yeah, you're going to have to own it. And Bill Clinton made that mistake. I mean, the day after he was elected, the stock market went up. And he says, "Oh, see, the stock market likes me," but it was not his doing, obviously.
Obviously.
So anyway, I hope the stock market keeps going up, and I hope the economy keeps going up, and I certainly hope that President Trump gets reelected. A lot of people say, "Oh, well, nothing to worry about. He's definitely going to get reelected." I think the worst thing we could do is get too cocky and not get out there and work for the next 2 years. If we want to have a Republican form of government, and I'm not talking about the party, but a republic in the sense that the Constitution speaks about it, then we need to keep Trump in office. And if we want a Democrat form of government, which the Founding Fathers never intended our country to be, you know, I pledge allegiance to the flag and to the republic, not the democracy for which it stands, right? We are a republic. If we were a democracy, this nation would have fallen already, okay? And it blows me away when I hear even Republican leaders, even Trump himself, refer to our democracy. We're not a democracy, but we're in danger of becoming one. And if we do, look out below. I know that's not about debt, but
no,
you brought it up.
Yeah, no, I'm with you. No, I agree. I do. I really do.
But if you do want to know more about how debt affects your personal economy, I'm concerned with the national economy, but I'm more concerned with my family and the inheritance I can leave to my daughter and so on. So if anybody wants to know more about that and how to use gold, you know, don't put all your money in gold. I'd never recommend anybody put all their money in anything, but you should have at a bare minimum 10% of your net worth in precious metals. So if you want to find out how to do that, go to Dwayne's up.
I'm sorry, say that again.
I said you're up. Go to
CFRNgold.com. That's
very
one
good.
word, CFRNgold.com. Just go there. You'll like it. Hey,
and what would they get if they went there?
Well, you'll learn about investment grade gold.
Yep.
That's exactly what.
Several good articles, some good videos, and I promise you, if you go there and get the Gold Education Starter Package, take you about an hour and a half to go through all the materials. You will know more about gold than 95% of the guys that call themselves financial experts in this country, because most so-called financial experts only know about stocks and bonds.
That's right.
So you owe it to yourself to get this information, and it's free.
You can't beat that. It's free. CFRNgold.com. Hey, it looks like you're going to talk about debt based upon what you got up on the screen here. And one of our traders in Bali sent me an article that was just published a few days ago. He'd sent it to me before you announced today what you were going to discuss, and he just messaged me and said, you know, I think that article, I think Dr. Tom might like that. So I'll send you the article, just to give you an idea what it's about. A new study has a whole different take on what debt relief means. Getting rid of debt doesn't just unburden finances. It takes a weight off the mind that clears up cognitive functioning, lessens anxiety, and improves impulse control. The findings come from researchers at the National University of Singapore's Social Service Research Center, which studied almost 200 low-income people who unexpectedly had portions of their long-running mortgage, utility, and municipal debts paid down by a charity. Researchers tested participants before and after their windfalls on their ability to spot matches and mismatches. The recipients were tested for generalized anxiety disorder and their ability to make more beneficial financial decisions. And while the results weren't spectacular, it was certainly noticeable. Error rates in the cognitive function test fell to 4% from 17%. The proportion of participants who showed relief from their generalized anxiety disorder, it went from 78% down to 53%. And the number of people showing so-called present bias, which favors instant gratification, dropped to 33% from 44%, a sign that their impulse control had also improved. And then I just want to share one more statement that this gentleman, Dr. Kuan, I'll send you the whole article so that you can study it.
I appreciate that.
Let me just find his statement that I found illuminating.
Well, it just makes sense while you're looking for it.
Yeah.
That it would improve people's emotional and mental abilities, because the Bible says the debtor is slave to the lender.
That's right.
And who wants to be a slave? Being a slave is depressing. Who wants to be this guy on the screen, right?
Right. And who would have ever thought that what I was looking for was on the next line down? See? You just scan in and you scroll in. It's just on the next line. Okay, the good doctor, whose name I just stumbled over, if I'd have just kept reading, our study shows that because debt impairs psychological functioning and decision making, it would be extremely challenging for even the most motivated and talented to escape poverty. So if you're really motivated and really smart, really talented, if you're burdened by too much debt, that may just be the very thing that keeps you from ever being able to get out of debt. But you've got 10 secrets to getting and staying out of debt. So please tell us more.
Okay. Well, why don't we ask the audience a quick question?
Okay.
Who's interested in learning about getting and staying out of debt? And if you say yes, it doesn't mean that you're in debt. It just means that maybe you care about other people that are in debt, and maybe you can help them with this information, or maybe you might teach it in your church or other organizations. So how many people would like to hear about how to get out and stay out of debt? Just type in a yes or a no.
And we'll wait.
15 seconds.
There we go. Here comes the why. Good. Getting out and staying out. Getting out can sometimes, it depends upon the magnitude of your financial crisis. Some are worse than others. Some people have a little more credit card debt than they should have, and others, anything short of a biblical miracle, they'll never see the light of day. So, opposite ends of the spectrum, tell us how to deal with it, Dr. Tom.
Well, just to give you a little tease, before we get done today, I'm going to show you a system that has worked for tens of thousands of people all over the country. And every one of them, no matter how much debt they had, were able to completely get out of debt, including paying off their mortgage, in 5 to 7 years. Sometimes a little less, sometimes a little bit more, but hardly anybody took over 7 years. So even the darkest picture, you know, there's only so much debt people can get into before the creditors stop letting you. So there is a finite amount of debt anybody can have, unless it's some just like crazy thing, like somebody has a long illness in their family and the person's in the hospital for a year, and you can rack up millions and millions of dollars worth of debt. But most people can't get in debt enough to where this plan would not get them out of debt within 7 years. And that includes a 30-year mortgage. So let's get into it.
Sounds good.
I do have a warning. This webinar is not for everyone. As I mentioned, if you're not in debt but want to help others who are, take notes. And if you are in debt and you're willing to be tough on yourself, make tough decisions, and do whatever it's necessary to get out of debt, take notes. However, you should just disconnect right now if you're in debt and any of these three things applies to you. You blame others for everything that is wrong with your finances, especially your spouse. Or you think, like our government does, that debt's not a problem, that everything will somehow work itself out. Or, I know this sounds ridiculous, but there are actually people out there like this. You haven't figured out yet that credit cards are not magical pieces of plastic that get you free stuff. Okay, so if any of those three things are true about you, I can't help you. So you might as well go do something more useful with the next 40 minutes or so. But if you really care about getting out of debt, or if you know people who are in debt and you want to help them, take notes. Okay, first one, as you would expect, get rid of your cards and write a budget. That's actually 2 points, but I'm counting it as one. So if you're in debt, cut up all your credit cards. Keep one, either credit card or debit card, so that you can use it for things like reserving a car, or renting a car, or reserving a hotel room. You do have to have some kind of plastic to do certain things, but if you ever use it, pay it off at the end of the month. Learn to live on a cash basis. If we were to poll the group here and ask how many are living on a cash basis, we'd probably find either nobody or one or two people. It's very rare. So we think it can't be done, but it can. You can live on a cash basis. One of the ways to move towards that is to write a budget. So the first step in that is keep track of every single expenditure you make other than what you're going to get on your statements, a credit card, a debit card, or your checking account. As a pastor, I have counseled many couples that want to get married, and I always tell them in the first session, you have to prove to me on paper that you can afford to get married, or I won't marry you, because financial problems are the biggest cause of divorce in the country. I've done seminars on marriage, and I'll ask even married couples, what do you think out of these three is the biggest cause of divorce? Communications, sexual problems, or money problems? And everybody always
money. Yeah.
Yeah, it is definitely money, but most people think it's communications because it's one of those little psychobabble buzzwords, you know.
Right.
Well, communication is good, okay? If you don't talk to your spouse and share your life with them, it is going to cause problems in your marriage. But the thing that stresses marriage the most is financial problems. And no matter how good the sex is, no matter how well you communicate, if you're under constant financial pressure, it's going to break you. So this is just a suggested framework for a budget. Your situation could be different, so you may need to change it up. But the main thing is write a budget. A budget is not taking the money you get in each week and putting it in your checking account, and then paying as many bills out of as you can until you run out of money. Okay. So number one, according to the Bible, if you want the Lord to bless your finances, you better be a tither. Number two, you have to make an allowance for housing. Now, this housing includes your rent or your mortgage, plus your taxes if you own the real estate, plus maintenance, plus utilities. And for years, this has been the sort of the benchmark. Keep your housing at 25%. However, there are some parts of the country where real estate and housing is so expensive that it has to go up to 30 or 35%. Set aside at least 15% of everything you make to pay on debt. Now, obviously, if you're in debt and you're going under and you're about to breathe your last breath, you're not paying 50% of your budget out towards the debt, or you'd be reducing it. It wouldn't be going up. So in order to get 15%, you're going to have to take away from other things that you're spending. That's why it's so essential to get a budget. Transportation, a good typical number is 15%. Savings, 10%. Now, I've had people, when I do this live in churches or whatever, raise your hand and say, well, is it really ethical to put money in savings when you owe other people? Okay, aren't you keeping money that you owe them for yourself? And my answer is yes, you are. In an ideal world, you would spend every bit of money you get on debt. But here's the problem. If you don't have a cushion, a savings account for emergencies, it can end up costing you much, much more. I'll give you one quick example. Your motor's making some funny noises. So you take it to the mechanic, and he says, well, we need to tear it down. Looks like you're about to throw a rod. And he tells you how much it's going to cost. You say, well, I'll just drive it for a while more. Drive for a while more, thing throws a rod. Now you have to replace the entire motor, and it costs you 3 or 4 times as much as the fix would have cost. So you do need to have some money set aside in savings. Once you've got a comfortable cushion, and some people say that's a 6 months worth of income, some people 3 months, pray about it, whatever you feel is appropriate. Once you've got that cushion, then you can put that money towards the debt as well. But get a savings account built up. And then typically, for most people, everything else, which need to be line item budgeted as well, 25%. Okay, here's where it gets fun. Slash your interest. I can hear you saying, oh yeah, that's easy to say, Tom. I'll just slash my interest. Banks and credit card companies and someone who charge me interest, I just tell them, reduce my interest. Well, actually you can. And it's one of the fastest ways to get out of debt. This will help you more than any other one single thing. Never, ever, ever pay the minimum on any kind of revolving debt. When you pay the minimum, you could eventually end up paying interest as high as 30%. Now, people say, no, I took out the credit card. It was 9%. Yes, it was. But read the fine print. If you only pay the minimum, they have the right to increase your interest rate. If you miss payments, they can increase your rate. And the highest in some states is 30%. Other states consider that usurious, and maybe 24, 25% is the highest. But you can end up paying much more interest than you originally signed up for, and therefore it makes it that much harder to get out of debt. It's like you dive into the water, and from the diving board, you down the bottom of the pool, you touch the bottom, everything's cool, and now you're going back up to the top to get some air, and somebody bigger than you grabs a hold of your feet. It is holding you underwater. Okay, that's what interest does. And as the interest gets bigger, the bigger the interest guy is that's holding you under the water. It's killing you.
And that's exactly what it feels like.
It is. It's like it causes some people to go into depression. Some people have even committed suicide over debt. When you only pay the minimum, you're not reducing the principal. Always think about every single debt payment you make as principal and interest and determine which part is principal, which part is interest. If you're paying the minimum, most times all your pay is interest. And in some situations, some of the credit card companies will actually let you pay less than the interest. So that means your interest is being added to the principal and you're paying interest on interest. This is insanity. Okay. Now I'm going to say this, and I'll say it several other times before we're done. This is going to take sacrifice. It's going to take discipline. It's going to take you being tough on yourself, but it's worth the sacrifice, because the relief you'll feel when you burn your mortgage and your last debt is paid off, nothing compares to that except getting saved. Okay. Call your creditors to negotiate rates. I mean, that sounds silly, really. But basically, a lot of them will work with you. If you call them, make a case, say, look, I've been with you for so long, I make my payments on time, and so I need you to lower my rate. I've gotten mail from another credit card company will give me a lower interest rate. So if you can't match that, then I'm going to transfer this to them. And they want to keep on getting interest. And even if it's less interest, they still want to do that. So most times, I won't say most times, but a lot of times, you can negotiate the rates down. It won't work if you have bad credit. If you've been missing payments, wait until you've got at least a good year of making all your payments on time and never paying less than the minimum before you try this. But if you've got reasonable credit, then if the rep says they can't help, ask for a supervisor. I call reps all the time on tech support and banking matters and so on. And I say, I want this and this and this. They say, well, we can't do that. I say, well, let me speak to your supervisor. They say, well, supervisors can tell you the same thing. They can't do anything I can do. I say, excuse me. If the supervisor doesn't have any more authority than you do, then you would be the supervisor, right? Well, I guess so. I said, well, then let me speak to the supervisor, because you're not doing anything for me. And then I'll keep going. I had a problem with my cable company. And I just kept going until I got the authority, until I got to someone who had the authority to, in this case, not reduce my rate, but to reverse a bad charge they'd made on my cable bill. It was incorrect, and the flunkies couldn't do anything. I got to a manager. Okay, get extra income. Wow, that sounds almost as easy as slashing interest, doesn't it? I'll just wave a magic wand and get some more income. That's cool. Well, no, you have to do something for it. Do whatever you have to do, short of robbing a bank or knocking over a gas station, anything legal, okay? If you're on a salary and there's overtime available at work, sometimes they tell you have to work overtime, but a lot of times it's on a volunteer basis. So volunteer to do overtime. I know, you work hard, you get home, you want to just put your feet up, watch the movie for a while, have dinner, relax, and go to bed. Nobody wants to work overtime. Nor do too many people want to work a part-time job for the same reasons. But this is not forever. If you can work overtime or take a part-time job and take that extra money and pay down your debt, then you're moving towards being a free man instead of a slave. Use your skills. Most of us have some kind of skill. It might be a hobby. It might be a job skill you've learned. Sometimes you can take what you do at work and do it on the side as a part-time gig and make money. Sometimes it's a hobby, like you're a good guitar player, so you can teach music lessons. If you're smart, or at least smarter than an elementary school kid, you can do tutoring with kids that are failing in a certain subject. If you're the one that always, plans the party or organizes the wedding, offer that as a service, charge for it. Maybe you know how to do web design. Maybe not the greatest web design in the world, so you'll charge less than the big professional guys, but it's a way to make money, and you can do it at any time. You can do it evenings or weekends or whatever it works out. If you know more than one language, lots of people pay for language translation, either translating documents or translating people who are being interviewed and so on. Okay, straighten out your priorities. This is a group effort, all right? When you're setting up your priorities, consider everything. Think outside the box. Ask yourself the tough questions. And then together with your spouse, prioritize your goals. For instance, if college is something that's really important to you, but you really want to just go to college and not have to worry about working, and that's not possible, you can't get enough scholarships or whatever, could you work a part-time job? When I went through college, I worked 2 part-time jobs. I worked all night at a gas station 3 nights a week. I split the shift with my roommate. He worked 4 nights because that was his only part-time job. And then every afternoon, I worked 3 hours in a retail store after school. I didn't get much sleep, but guess what? I didn't walk away with a couple $100,000 in student debt. Okay. If you want to buy a home, well, doesn't mean you don't have to move to a better place, but consider renting. Matter of fact, in this market, I think that we're looking for another real estate crash, like caused the big crash of the stock market in 2008. And if I'm right, you can buy that same house for less later on. Another reason that it's a good idea to rent is you get to know what the house is like and what the neighborhood's like. You might rent a house and get real glad that you didn't buy it because you find that you got the neighbor from hell that lives next door. He plays loud rock music all night long, or his dog comes around and attacks your kids, or he gets drunk and runs over your mailbox, and you say, boy, I wish I hadn't bought this house. So most people that are looking to sell a house, if it doesn't sell quickly, they're willing to take a renter, particularly if you do a rent with an option to buy. That lets them see that, okay, you're serious, that you should seriously think about buying a house, and you negotiate the price now, which is good because a year from now, if I'm wrong and real estate goes up, you're buying the house cheaper because you're locked in today's price. And I've been able to do this and even negotiate where anywhere from a quarter to a half of the rent I paid for the first year is applied to the down payment. That's a real sweet deal. That's when somebody really wants to sell their house.
Right.
Okay. You have any experience with that?
Yeah. I've always had some kind of a arrangement going on. I was buying a $500,000 property here in Phoenix when I woefully couldn't afford it, but I negotiated a lease option thing, so it made me feel better about paying rent. I never ended up buying the place, but I felt better paying the rent every month.
Yeah,
because I knew I could exercise my option.
That's right, because we think about rent as just going down a black hole, and we think about buying a home as building something. But frankly, when you first buy a home, the first several years, the huge majority of what you pay is interest, and you're not knocking down the principal much at all. And it's only about 1 out of every 4 or 5 people that ever keep a 30-year mortgage all the way through. And when you refinance, which most people do 2 or 3 times for one reason or another, it starts that interest clock working again. So just in simple terms, your first payment on a 30-year mortgage is 90% interest and 10% principal, right? By the time you get to the end, it's reversed, and most of what you're paying is principal. So in some cases, you're actually better off renting than buying. You're paying less payments. You're not the one that's responsible for fixing the roof if it leaks. If the air conditioner breaks down, the landlord does it. So renting doesn't mean that you're a low-class citizen. Sometimes it's a smart financial decision. Okay, prioritizing. Write down the things, you and your spouse, that each of you consider the most important, and then discuss them with your spouse and decide, prioritize the goals and talk about the best way to reach those goals. Now, I've done this with couples before, and it's very seldom that the top 5 priorities on both lists are the same. Matter of fact, practically never. And in some cases, not a one of the priorities of the husband's list is on the wife's list and vice versa. Okay, so it's going to take some negotiating and discussing. Maybe you decide to take her most important goal from her list as the first one, and then the second one is your most important goal, and you go back and forth. But you have to be on the same page. But remember in all this that your relationship itself is more important than any goal. Even if it's a shared goal, even if you both agree on it, if working that goal harms your marriage, then you may need to back off a little bit and take care of your family first, because that's your first responsibility under the Word of God. Okay, knock down your debt. Oh, great, Tom. Slash interest, get extra money. Now you tell me just knock. All these things sound pretty impossible. You just look at the title, right? Knock down your debt. But there are ways to do it. And I'm going to tell you my little secret system that I alluded to earlier. If you really want to chip away at your debt, this is the system to follow. I see somebody just arrived. Get your pencil out. This is the most important part. Take notes, okay? This is best done with a spreadsheet, like an Excel spreadsheet or whatever the Apple version of that is, but you can do it on paper. But I'm just going to assume that we're doing this in a spreadsheet. So we're going to make 4 columns. And in the first column, we're going to list all of our debts. Excuse me. Then in the next column, we're going to list what our monthly payment on those debts is. All right? And then in the next column, we're going to list the interest that we're paying on those debts. All right? 4th column is where you're going to prioritize them. So if it's on paper, you just go and put a 1, 2, 3, 4, 5 or whatever down there. If it's in a spreadsheet, you can just sort it by the interest. And you want the highest interest rate loan to be at the top. Most people think that they should put the highest balance. Let's kill the biggest bill first. Don't do that, because it's going to take longer. Okay? If you kill the highest interest rate bill first, then the whole process will go much quicker. Now, remember, there are different kinds of debt. So revolving debt, like credit card debt, gets higher priority because it's compounding debt. A mortgage is it's compounding interest. I'm sorry. A mortgage is simple interest, not necessarily your second mortgage, but your prime mortgage, your first mortgage. So list them by interest, and then one at the top of the list is the first one you're going to attack, and this is war. So think about it this way: I'm going to attack this bill, but before you do it, you put a little extra gunpowder in the cartridge, and you turbocharge your debt reduction problem with an extra 10%. An extra 10% of what? Well, remember that first column where you listed all your debts, and then the second column where you listed how much you're paying? Okay, and by the way, don't list the minimums. List a reasonable amount to pay on that debt. Add them all up, and then that's what you're paying every month on all debts. We're not talking about your utilities or food or tuition or anything else. We're only talking about debts where the interest dragon is eating you alive. And you take 10% of that amount and you add that to your program. Well, where do you get the extra 10%? We're going to talk about some ways to do that a little later on. But in general, again, do whatever you have to do. If you have to stop bowling, or if you have to stop, if you smoke a cigarette, you should stop anyway. But if you go out to eat a lot, stop going out to eat. It's much more expensive than you eat at home. Most people could come up with an extra 10% by shifting priorities around. Watch a movie at home instead of going out and spending $25 at the theater for expensive popcorn and tickets. If you can't come up with 10%, start with 5% and work it with that extra 5% to turbocharge. But work it, get it up to 6, 7, 8, 9, 10. Okay. Once you've got your 10%, you start paying that amount of money. 1/10 of your entire debt load every month is going to be added to the payment that you're paying on credit card number 1. Okay. Then you'll find you'll be amazed really how quickly you get that thing paid off with just that extra 10%. Then you go to the next credit card with the next highest interest rate. And now you have 3 baskets of money. Okay. You've got the money you were already paying on that second debt. You've got the money that you're paying on the first debt, plus the turbocharge money. Say, wait a minute, I got that first debt paid off. Shouldn't I be able to celebrate? Go out and splurge, buy a new dress or whatever, take an extra vacation? No, you don't take that money that you were paying. You were having to pay it anyway. It was part of your budget. It's gone. So now add it to the second one. And then do the same thing with the third one. You're paying the payment for the first debt, the second debt, the turbo money, and the third debt's money. So the farther down the list you get, the quicker it'll happen. I've had people tell me that it's just a matter of months by the time they get down the list before they have certain debts just completely dead and gone. And any extra money you get from anything, if somebody sends you a birthday card and your aunt sends you like a $20 bill in it, like mine used to do, or if your aunt dies and she leaves you $1,000 in her will, any extra money you get goes towards debt. You add that to the turbo money, and that will really, really accelerate things. Reward yourself. Have debt reduction ceremonies. Get the whole family involved. And don't go out to dinner to celebrate. Cook a special meal that everybody likes at home and maybe bake a cake or something. Now, after your revolving debt is paid off, then you attack your car loan or loans if you have 2 car loans. And then finally, you put your money towards your mortgage. When all the debt is paid off, then you don't say, okay, that's paid now. All this money that I've been paying out, the whole long list, I can just go out and splurge. No, you put that money in savings until you have a respectable amount of money in there for an emergency fund. And then you start putting money into a retirement fund. Once you've got those things taken care of, then you can increase your lifestyle a little bit. But you have to tighten the belt until you're totally out of debt. Okay, get some perspective. All right, this is important. As I said earlier, becoming debt-free isn't easy, but I promise you it's worth the sacrifices that it requires. Don't allow debt to consume you and hurt your family. Debt is your enemy, just as inflation is the enemy of your investments. So work together with your spouse to slay this debt dragon. If your kids are old enough, get them involved too. I mean, I would say even 6 or 7 years old, when the kids are begging for every toy they see in the store, say, look, sit them down and talk to them. Say, look, Mommy and Daddy would love to buy you everything you want, but we can't afford to. And in fact, we owe money that we have to pay off. So it's going to help you. We're going to be able to give you a bigger inheritance later on. We'll all be able to live better if we get rid of this debt. So surprisingly, kids will understand. They may not understand it fully at 6 or 7, but by the time they're 10 or 11, they definitely will understand. They hear everything. Kids are unbelievable. My daughter was 10 years old. She'd be in her bedroom on the other side of the house, and if we were talking about something we didn't want her to know about, somehow or another she found out about it. So if you're in debt and having financial problems, chances are they already know about it anyway. I mentioned earlier, financial problems cause more divorces than anything. So don't let debt destroy what's most important, which is your family, and particularly your spouse. Because one day your kids are going to be gone and off to college or married or whatever, and you're going to look at your spouse and say, who are you? You know, because everything was involved with the kids, right? So don't neglect your spouse, please. Have a date night with her or him, whoever's listening. And again, you don't have to go out to dinner. You don't have to put it on a credit card. Even if you don't know how to cook, you can find anything you want to learn in the world on YouTube.
You really can. You really can.
It's truly amazing. When somebody told me that, I thought that's ridiculous. But I've tried searching for some of the most esoteric things, and sure enough, they're there. And so search, prepare a simple meal. It may not be as fancy as you get in the restaurant. It doesn't have the linen tablecloths and the candles and the ambiance and all that. But the fact that you took the time and effort to learn how to cook something and you did it for your spouse, that's special, okay? And also, you know, take time for family activities. Don't be so consumed with working and getting out of debt that you neglect your family. I think every father should spend at least 1 hour a week with each of their kids. Just 1 hour. Their alone time. Mothers spend a lot more time with the kids, even if they work. But for some reason, I think the average time that most fathers spend in the United States with their kids is less than 5 minutes a day.
Yeah, I saw a recent study. It was 7 minutes.
7, okay.
Well, an entire day, 7 minutes, yeah.
That's encouraging. Okay. Don't feel like you're just cut off and you can't spend any money as you're reducing debt, because it's sort of like if you're dieting and somebody told you couldn't eat any food at all, you're not going to last very long. So don't spend crazy, but you can still spend. Just don't use credit on it. Do the things that are important. Again, back to prioritizing. There's some things we spend money on all the time just because we do it, but they're not really important. Like, do you really need a cable subscription? Okay, that can be $100 a month. You could cut it out of the basic plan, or you could just watch TV on Netflix on your computer. Okay, so get the important things and get rid of the extraneous things. But whatever you do, don't use credit. So if you love to travel, don't cancel your vacation. Instead, save money every month and pay cash for the vacation. Shock a travel agent. She may faint because nobody does this, but go in and lay down cash on the table or write a check and say, here's the money for my vacation. Figure how you can economize on a vacation. I don't have to do this, but when we go to the park, you know, like SeaWorld or whatever, we take our lunch with us and we bring our water with us. Why? It's not because I can't afford to pay $15 for a hamburger or $4 for a bottle of water. I just refuse to do it. I think it's ridiculous. Okay? But some people can't afford that. So if you go to vacation, they're not going to discount your ticket at the gate. It's still going to cost you a lot of money to get your family through that gate. But you don't have to pay their ridiculous prices for food and water and so on. I've seen a family of 4 spend $150 a day just on food. If you eat 2 meals a day in the park, that's nuts. If you're getting married, don't say, well, we'll just elope, then we don't have to pay for a wedding. There are ways that you can do it and get what you want with less. For instance, where is it written in the Bible that you have to feed everybody that comes to your wedding? Okay? It's ridiculous. And one way well, I mean, we just kind of expect it. You know, we bring a gift and therefore we get a meal. That's not what it's all about. Okay? So I give this tip to a lot of people planning weddings. I said, you change the time. Make it halfway between dinner and lunch, so they're not hungry when they get there, and by the time the reception's over, they'll go home and eat dinner at home. Maybe you have some snacks or hors d'oeuvres or nuts or something like that. If you want to serve a meal, get your friends to help. You'd be amazed at how many of your friends say, sure, I'd be glad to bring a dish, and have like a covered dish buffet. Maybe somebody you know knows how to arrange flowers, or maybe you do. It's a whole lot cheaper to buy flowers in bulk and then cut and arrange them yourself. Maybe you've got a friend that's a good cake baker, and maybe they've never done a wedding cake, but all you have to do is do one big layer, then another layer smaller diameter than the smaller diameter, and put the icing on and stack them up. So if they're willing to do that, maybe as a wedding present for you, let your friend make the wedding cake. And if they can't afford the materials, buy the materials. It's still cheaper than spending a couple $100 for a wedding cake. All right. And if somebody has the nerve to complain that you didn't feed them, say, well, why don't you buy dinner for everybody? That's what I would do. But I'm a little more in your face than a lot of people are. Okay. No eating out at all. No McDonald's, no Chick-fil-A, no Mexican restaurants. Don't eat out if you're in debt. It costs far more than eating at home. You say, well, my wife can't cook. Well, take some cooking lessons. Get a cookbook. Get on YouTube. Get the whole family involved. Make it a fun deal. Show the kids how to chop the vegetables up, or let them knead the dough. They love that. If you're making a meatloaf, let them get their fingers in there and squish together the meat and the eggs and the breadcrumbs and all that. This is one good way to get your family together. I can't tell you how many people that told me when their kids are turned 13, 14 years old, they say, I don't know this kid. Who is this kid? This is not the kid that I raised. And it's because they never talked to him. So, of course, they don't know him. So the dinner table is a great time to get to know your family. And it's a lot easier to talk at home than in a noisy restaurant. You want to treat your friends. Maybe they helped you move. You want to do something nice for your friends. Instead of taking them out, have a dinner party for them. It's not about the place. It's about the company. Okay? And they would probably appreciate a home-cooked meal where you asked them, well, what kind of foods do you like to eat? And you sort of catered to them rather than just the fact that you took them out someplace and slapped down a piece of plastic. I kind of alluded to this earlier, but if you want to have a romantic dinner with your wife, do it at home. Let the kids spend some time with relatives, or send them over to their friend's house for the evening and just have some alone time with your spouse, and either cook together or cook for your spouse. I am not a medical doctor or a nutritionist. My doctorate is in theology, okay? So I know a lot about healthy eating, but don't take this as medical advice. But I'll just give you a few things here. When you eat at home, you can have healthier ingredients. You don't know what in the world they're feeding you at a restaurant. Let's say beans. We get fresh green beans. We steam them ourselves, okay? In the restaurant, they could be canned green beans that have been sitting in a warehouse for a year, and all the vitamins have leached out into the water. Don't do it. Healthier preparation. Did you know when you boil vegetables, almost all of the vitamins leach out into the water?
Yes. Yes, I did.
I heard one nutritionist say that you're actually better off throwing away the vegetables and drinking the water.
Yeah, I know that's true, because you just, you cook them right
So, do you know what to do about that?
Well, we steam vegetables a lot.
There you go.
Yeah.
You can get this cheap little thing, little metal thing that you put in the bottom of the pot, and you put about a ½ inch of water in there. The water still boils, but it's only the steam that hits your vegetables, so the vegetables cook without leaching out the preparations, the vitamins. So, bottom line, when you eat at home, you know what's in the food, and you know how it was prepared. All right. Organization. That's always a good thing, right?
Absolutely. Especially for those of us who are organizationally challenged.
Yeah. Just like a friend of mine told me the other day, he was follically challenged. He's bald, you know.
Right.
And I sometimes say I'm vertically challenged because I weigh more than I should, you know. So it's not that I'm overweight; I'm just under tall, you know.
Okay, that's good.
So what we're looking at here is a filing cabinet drawer with hanging files, but there's lots of ways you can do it. This is a thing that looks a lot like this. It's called an accordion file. You can pick up at any office supply store, and it's got little tabs and folders, and you organize things in there just like you would in a filing cabinet. If you want a filing cabinet, you can pick up a cheap 2-drawer filing cabinet for $20-25 at Staples or Office Depot. Or if you're computer literate, like I'm sure most of the people on this call are, do it on your computer. However you do it, organization will help you paying down your debt. Now, let me give you just one simple little tip. When you're filing, if you're paper filing, and even if you're doing your budget on the computer, you still need to keep the bills. So when you file, always file to the front. That way you can find the latest bill or statement. A lot of people stick it anywhere in the filing folder, front, back, middle, and it's just a mess. Being organized puts you in control. It helps you keep all your important documents easily accessible. And you know, make sure you label the files, the tabs clearly, so that you know exactly where to find things. Now, you may set up the system and your spouse may not be involved with it. That's okay, but make sure you sit him or her down and explain how the system works. Because if you get hit by a car or have to go out of town and work for a long time and whatever, they need to understand it. And same token, even if one of you handles all the finances, it's still vital for the other one to know, you know, what's going on. Like, for instance, if you're following the system, they need to understand how that works. Once one bill is paid off, you take all that money and add it to the next one. They need to be in the know. So I suggest at least a once-a-month financial meeting with your spouse. I used to run a company, and I had all the company department heads get together, and we talked about finances once a month. So your family's like a little business that doesn't want to go bankrupt. Okay, finally, lose the toys. This is really...
That's a tough one.
Oh, this hurts. A lot of people are moaning and groaning right now. But toys are things that are nice to have, they're fun to have, but you don't have to have, okay? And so this may mean that you have to sell something that you love. So be it. Your family's more important. Getting out of debt is more important. And you say, well, you know, I paid $4,000 for this jet ski and I can only get $1,500 for it. Well, that's $1,500 you wouldn't have, and you probably only use the darn thing twice a year. So sell it, okay? Giving up things that are important to you is far easier than living with the damage that these things cause to your financial well-being. The first damage they caused was when you bought them. Right. The second damage is the interest that you're paying on the loan if you have it financed. And even if it's not financed, it's still causing you damage because it's money that could have been used on the debt. So just let them go. They're only things, you know, whether it's a boat, a piece of art, a motorcycle, a motorhome, any of these things can be replaced. Your family can't be. I have a friend that spent thousands of dollars on a motorcycle, and twice a year he and some of his buddies went out on a motorcycle ride. That, you know, it took a few days and toured around the country. It was a lot of fun. I said, sell the darn thing. He said, but then I couldn't go with my friends. I said, borrow a motorcycle or rent a motorcycle or don't go. Your choice. But don't keep thousands of dollars tied up in a motorcycle that gets used twice a year. Otherwise, I'm going to have to slap you upside the head. So you may even have to downsize your home. Now, for some people, that's just a really practical thing to do anyway, because you have a 4-bedroom house, the kids are all off married or at college, and you don't really need a 4-bedroom house anymore. So downsizing is a little easier decision. You might even be wanting to, because it's less house to upkeep and maintain and clean. But you may really want to stay in your house. It's been in the family for a couple of generations. You grew up there, your parents grew up there, but you really can't afford it. There's a couple of different options. You can sell it and then rent someplace, or I've known people that have done this and it's worked well. They moved out of the big home, they rented a smaller home, and they were able to get enough rent out of the big home to pay the mortgage and give them enough extra money to either subsidize or totally pay off their rent. Okay, so now they've got that 25% or whatever it was that they were paying out of their budget towards housing gone. Some of your friends will ask you, well, why'd you move out of that nice neighborhood and into this middle-class neighborhood? Why'd you move out of that big house? Didn't you like it? You're living in a little 2-bedroom, 1-bath house. Don't worry about it. The only opinions that really count are your family's and God's.
Amen.
Okay,
that's very true.
So
very true.
don't let pride keep you from doing the right thing. Okay, so that's what I have to say. Anything you want to discuss about that?
What about people that are facing bankruptcy? What do they do?
Well, in some cases, bankruptcy is not their choice. Okay, creditors can force you into bankruptcy, and if it gets to that place, it's probably too far along for you to do anything to avoid bankruptcy. But if you see bankruptcy looming on the horizon, then you can do some of the things we talked about today. You can go to a credit counselor. Don't go to these people that want to charge you $500. There are plenty of nonprofit groups that realize how much debt is hurting people, and make sure you go to a Christian nonprofit, because otherwise the other people can say, well, you can't afford to give 10% to the church.
Right. Yeah.
They don't understand that giving that 10% is the key to everything else, right?
It's the only way the rest of this works.
Yeah.
Yep.
So go to a consumer credit counselor. A lot of times what they can do is
that's
call
actually
up
the name of one of the organizations that I'm familiar with, Consumer Credit Counseling. That's the actual name of that nonprofit.
Okay. Well, I know there are a lot of them, and I know that they're effective. What they will do is they'll ask you, how much money can you set aside for debt? So I'd suggested 15% of the average budget. That might not be enough. You may have to do more than that. But they'll look at your whole picture, and they'll say, okay, here's how, you agree that you're going to either write them a check and they'll pay the bills, or that you're going to pay the bills, however they work. But this money is going to be spent on debt and nothing else. They have to have that commitment, because then they can call up your creditors,
right,
and they can negotiate. They can say, look, either they're going to go bankrupt and you're going to not get anything, or we'll get this paid off, but you have to reduce the interest. You've got to maybe forgive some of the debt. You've got to agree to a longer payout period, whatever they can negotiate. But just make sure, if you make that agreement, that you keep it, that you always make sure that money is there for them to, so that they can keep their word. But that can be very, very effective.
Good advice. Very good advice. Thank you, Dr. Tom.
Sure. Anybody else have any questions?
Let me pull up the chat box here and see if there are any questions. Let's see. Oh, I see Laser left some comments. But he's... No, I don't have any standing questions.
Okay. All right.
This is very, very good, and I hope everyone out there, if it's not you that Dr. Tom was talking to, then he was talking to somebody that you know. And you can't go to them judgmental. Oh, I got here. Do this and it'll fix you. No, you got to go to them with love. If you want a good response, if you really want to help them, go to them with love. Go ahead.
Well, just two quick things. I have a recording of this, so if you're already signed up at CFRN Gold, you've got my contact information. Send me an email, because unless you took really good notes, you're probably better off showing your friends the video. So I've done this as a video. The other thing, I'm glad that Dwayne brought up bankruptcy. That's something I'm going to add to this. Bankruptcy, a lot of people feel is just really shameful. Just one step down from adultery. It's not something any of us want to ever do, because when you go bankrupt, you're going back on your promise that you made, your signed contract to pay these bills. But the concept of bankruptcy actually started in England, and it's from the Bible. And it's taken from the concept of the year of Jubilee, when all the debts were forgiven.
Right.
That's every 50 years. So don't feel condemned. Don't feel like I'm lower than a worm, because I went bankrupt. Just start with the attitude that you're going to live responsibly from now on, that you're not going to spend more than you make, that you're going to always save money and live within your means. And, it's not something anybody wants, but it is survivable. So don't feel condemnation if you've been bankrupt, or if you're forced into bankruptcy.
It's protection afforded you under the laws of our great country. So
that's right.
Dr. Tom, thank you once again. God bless you. Let's have a conversation between now and next Thursday, okay?
Sounds good.
All right, give me a call anytime. All right, God bless you.
Bye-bye.
All right, I'm going to pull the screen back. Here we go. All right. And so, where are we in relation to where we were when we started this radio broadcast? About the same place, right? What happened? We came down into support. Yeah. How long will this grind on? Well, until it sorts itself out. Are we going higher? Are we going lower? Only the market knows. Don't let anybody tell you different. All right. Good word for the day. Vengeance. Vengeance. Vengeance is mine, saith the Lord. Vengeance is God's job, not ours. He will repay, whether on the final day or in this life. Now, sometimes we just feel we got to take matters into our own hands, but God can discipline your abusive boss, soften your angry parent, bring your ex to his knees or her senses. Forgiveness doesn't diminish justice, it simply entrusts it to God. He guarantees the right amount of retribution. Left up to our own devices, we either give too much or too little, but He has the precise prescription. And unlike us, He never gives up on a person. And you should be glad about that. Long after we have moved on, God is still there, probing the conscience, stirring conviction, and orchestrating redemption. He's on the job 24/7. If you're trying to fix your enemy, that's God's job. Forgive your enemy, that's where we come in. Scripture says, never pay back evil with more evil. Do things in such a way that everyone can see you are honorable. Do all that you can to live in peace with everyone. Dear friends, never take revenge. Leave that to the righteous anger of God. The scripture says, I will take revenge. I will pay them back, says the Lord. Instead, if your enemies are hungry, feed them. If they are thirsty, give them something to drink. In doing this, you will heap burning coals of shame on their heads. Don't let evil conquer you, but conquer evil by doing good. Romans 12:17 through 21. Author Max Lucado says, revenge builds a lonely, narrow house. Space enough for one person. The lives of its tenants are reduced to one goal: make someone miserable. They do themselves. No wonder that God tells us in Hebrews 12:15 to watch out that no poisonous root of bitterness grows up. Don't do it. Vengeance is mine, saith the Lord. Now go love your neighbor and your enemy. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.